Hi, everybody. This is Seth Martin, and this is the Middle Class Investor this week. It's Friday night, about 11 o'clock, and I'm going to go fast because I'm a little bit groggy. In fact, if I start rambling off on something, just cut me a little slack because I'm really feeling sleepy, and I got to get up early in the morning. Going to go dove hunting and have a little fun. So I'm zoomed in here on the S&P 500, and you can see here we had a down week, although it looked like it was going to be an up week. But after the Fed meeting, the bears started pushing the market down, and then today pushed it down even further. And I think the countertrend rally that was pushing prices up in this direction is now over, and we are officially back in downtrend. And we should see prices go below this 1825 area, which is lower than the previous low back here. Let me zoom out so you can see the previous low. The previous low is back here. You can see it's right at 1825, and so we should break that, maybe even go to 1800, even a little lower if you can believe that. You can see we got our support box here at, where's our support box? It's right at 1800. Excuse me. But if the market comes down, you could get a long tail, right as it's kind of carving through. It's kind of moving like this. It's, moving pretty fast. And then down here, when it starts getting close to the end down here, you could get something that looks like this with a really long tail like this that could bring us all the way to 1775. And this is, look, if you got a 401k or an IRA, you're gonna feel a lot of anxiety here, but don't sell yet, because the area we're looking for to get out at decent prices is way up here around 2050, 2060. And so after we get this lower low, the panic's going to start setting in, and a bunch of people are going to get washed out. But we're going to be looking for a move like this, okay? Now, once you get this is when you don't want to be long the market, because this move here could be quite significant. And in fact, let's just say, let's just for grins and giggles, as we used to say, let's just say that the market decided to go to 1800, okay? If we take out Mr. Fibonacci here and we go from 1800, let me erase this one. Okay, let's delete that one. So let's say the market, so of the next higher degree of trend, this would be the end of kind of the first move down, right? So we're gonna click on this area and go all the way back to the start of this pattern here. That would be it right there. So now I want to show you, where is the 377? It's not even on this. Let's go out a little further. See, the 377 is down here below 1,000 on the S&P. And you know what? I think that must be wrong. Let me look at let me look at a daily chart, because I cannot see this like I need to be able to see it. Might have clicked on the wrong thing here. Well, not really. That's pretty much it. There's the high. So it came down, rallied, came down, rallied. Okay, that's right. So I'm sitting here whispering. I'm sitting here talking to myself. So again, cut me a little slack. I'm kind of tired. So 377 is down here below 1,000. So this next move down should take us past the 2011 lows and down here around 900. So you definitely don't want to be in the market when that happens. So we're gonna be watching this move that I'm looking for, and you're gonna hear me ring the bell pretty loud on this, because once we come down here, this move up into this area is going to be big and loud, and you're going to hear people saying, the sell-off is over, it's all good, and then whack, okay? And I'm talking big, big whack. So pay attention when we start getting into this area right in here. We're gonna make a high, we're gonna pull back, and then right after we eclipse this high here and this move up, really start paying attention right into this area here, so that you don't get caught with this right here. I mean, you can see if I pull up a daily chart, you can see how fast the market sold off here. I mean, this was a pretty extraordinary move. I mean, the market went from being up 30 to down 10. I mean, it had a 40-point swing in the S&P 500 in less than a half hour. I mean, it was a pretty extraordinary move. So, and those can happen. So you just you really kind of gotta keep from being too greedy on these bounce back up. You need to just pick your spot and go ahead and get out. Let's look at the VIX. The VIX was, the VIX didn't spike as high as I thought it would. I mean, this is hardly anything on the VIX. I guess the first part of the week it spent going down. Maybe that's why it didn't spike up too much. But you can see here, this is not much of a move for the VIX at all, given how much selling we had in the last couple days. So, the VIX basically went from 25 down to 22, 28, something like that. So that's not a huge move for the VIX. But there will be huge moves in its future for sure. Look at Japan. Japan clearly, it didn't make this box area and then rolled over. I traded the US dollar, Japanese yen the other day. I made a really good trade in it, and I'll show you that in a minute. I'll show you why, what I was looking at there to make that trade. The 10-year interest rate market. So, you've heard me talk about, is this pullback over? Is there more to go? There's no way to know for sure, but to me, this big white candle right here is signaling that this is the end of this downtrend. So, if you want to do something like put a line here above the highs, and then, once it breaks above that area, just go ahead and buy. If you want to do something like, there's a bunch of different ways you could set up, a trade. But bottom line is, if the move from a while back, let's see, year before last, was the first move off the low, and this is the first pullback, oh boy, the move to the upside is going to be really rapid and fast and scary, and probably will just shut down the mortgage market once and for all. Janet Yellen didn't raise rates this week. I mentioned it just briefly, but she was actually asked after the meeting. What was she asked? Something like, because she keeps talking about, well, we're going to be in this low interest rate environment for the foreseeable future. So some reporter says to her, look, do you ever see the Fed, raising rates again? It's starting to sound like you guys just will never raise rates again. And she actually said, well, I can't rule that out as a possibility. Wow, that was something. What she doesn't know, or I don't know if she knows or not. This is what's scary. Who knows what these people really know? But when this starts to move out in a big way, the Fed is going to have to raise rates. They don't have a choice. Either that or you're going to have the dollar just collapse. So the Fed will have to raise rates when interest rates start getting up and away. Don't listen to Janet Yellen when she says we're going to keep rates at zero forever. They can't do it. They won't be able to do it because the long rates will start going, And the short rate, they can't have the short rates that far away from the long rates. It screws up the banking system. That's really about it on that screen. I don't want to go into too much more detail. Here's the US dollar, Japanese yen. And where I traded this was where this red line is. This was my entry. And my exit was right. Golly, I don't know if I could reproduce it. I'm going to say it was right in this area right in here. It made like $1,600 on the trade, that's respectable. So I was pretty happy with that trade. If you look at the dollar didn't really move that much. I mean, it moved a lot, but given the Fed meeting and everything, I would have thought it would have moved even more than that, but it didn't. And I think the dollar is slowly but surely becoming marginalized by these other central banks around the world that are also printing money, monetizing their debt, and starting to make our Federal Reserve look like we're a bunch of dummies and we shouldn't be normalizing our debt. That's just foolish. So anyway, I was just looking at something here for a second. Bear with me. I'm trying to remember what else we look at on this screen. Well, let's just go over to NinjaTrader and look at a couple of. Here's the DAX. The DAX seems to be bouncing off trendline support, but we could get a little wiggle here and then lower low. So keep your eyes peeled for that. Let's look at. I guess we can look at the ES. Yeah, we can look at the ES. This is a 180-minute chart. And you can see here, if I put a decision point off of this pivot here, the recent pivot high, you can see it was right at DP support or DP resistance and then sold off. So this little move to the upside is over, and we should see prices fall below this 1820 area in fairly short order. So keep your eyes peeled for that as well. Let's see what else. We can look at the FTSE. Here's the FTSE. The FTSE appears to want to bounce and then lift, but let me caution you on that because it could just kind of do what it's doing now and then wiggle a little bit and then go down. And so this move is going to be very, very dramatic, very breathtaking. So just be careful in the market. You know, the Fed, when they come and talk, there's a lot of volatility in the market. In fact, let me show you the price action when the Fed was talking yesterday. It's this area right here. So the market hit a high of 2011, what did we say this was, a shooting star? It came down and then popped up a little bit and then wham! And then before the close, so here's the close here. Before the close, the market went from 2011, 2012 area all the way down to 2000. What is that? 1,971. I mean, that is one heck of a move. You don't see those every day. Let's see, what else do I have? Crude oil. We could look at crude oil. Crude oil, you can see I got a DP support area. We could also get a little bit of a wiggle and then down, although I don't think that's likely. I think what's likely is the market wants to go here and rest into this triangle area. So I would look for that to happen over any other odd-based methodology. All right, well, that is it for this week, everybody. Just just take it easy, take a deep breath. We're going to wait for the new low. I wouldn't recommend going into the 401k to try to recover that bounce, mainly because it might not be that long. This last one was 3 weeks, but who knows? The other one could be shorter, or it could be faster. It's most likely going to be shorter, but we don't know for sure. And so let's just keep it all, where it is right now. What else was I going to say? The website, let me pull that up. Not the website, the YouTube channel. Most of you, I'm sure, have seen it. Middle Class Investor. A few more of you need to subscribe. We don't have many subscribers. But just come in here, click play on the video, and then click let me know where you live. Not exactly where you live, but if you live in a different country, that kind of thing. All right, everybody, thanks for coming in this week. I really appreciate it. I'm happy to know that. The reality is, even if one person was watching this in a week, it would be worth it because first of all, most of you are somebody I know, and I don't want to see anybody I know lose a bunch of money to, Lloyd Blankfein and Jamie Dimon and these bankers that are just fleecing us every day. I don't want y'all to lose any money to those people. So stay with me. Let's navigate this thing. The trend is definitely broken, so prepare for lower prices, prepare for a lot more volatility. When I say prepare, I mean mentally prepare, and I will help you navigate a great place to get out to protect your profits, and then you can sit on the sidelines while the chaos ensues and sleep like a baby. And that is really living when the whole world is burning down and you're in cash and sleeping like a baby. So I think you'll really enjoy that. All right, everybody. That is it for this week's Middle Class Investor. Please come in and see me next week. Please send my YouTube videos to your friends and family. It's going to be super, super important over the next, I would say within the next month and a half, it's going to be super important that if you're not listening to me, you should be listening to me. And let's keep each other safe and out of these crazy markets, okay? All right. Bye-bye, everybody.